up, motherfucker?
Yo, what's up, guys? August 2nd. Okay, so let's get to. I want to cover some cycle stuff today. What's up, UG? So let's just get to that. Just get to that in preparation for the week. So let's review certain things. We're done with July. We are done with that month. Okay, goodbye this. Let me show you this image. I thought this was funny. Yeah, oh shit, here we go again. Another taco. Yeah, you got all the threats into Friday, and then you taco out, and then you make oil crash 10% or something like that. Oh, nice, very nice. This is how it's always going to be, okay? This is how it's going to be. This is the mechanism by which we can keep pumping up the markets. So, I think if you missed out on getting the dip Wednesday, Tuesday, Wednesday, Thursday, early morning before the Japanese manipulated their yen, if you missed out on that, I don't know what to say. I don't know if I would chase it, honestly. I think you're going to have to wait for another dip to happen. We're getting close to the options expiration, right? That's about 3 weeks. Options expiration is about 3 weeks. Let me check the calendar here. Yep, exactly 3 weeks. So the first Friday of the month, August 7th, second Friday will be August 14th, and then the third Friday will be options expiration for the whole quarter. Options expiration, futures expiration, VIX expiration. VIX expiration will be Wednesday, August 19th. So as we get closer to those dates, that's when you're going to see fireworks. But for now, we can ride it up till then. Now, are you going to chase? I don't know. If you missed out on when I told you to get the bottom, you missed out. You just missed out completely. I don't know if I feel like telling people, well, time to chase it up. Yeah, you could chase it up. You could try chasing it up. But if you didn't get SanDisk, Micron, some other, the Hut. So I didn't get SanDisk and Micron because I thought it was just too much risk. I already had Hut, CIFR, NBIS, IREN, Corzi, whatever. Those things are fine. That's plenty risk. Okay, those things can go up 50%, uh, probably 100% by the time we get through this week, and then I can get out, and that'll be the end of that trade. For SanDisk, SpaceX, all the other ones, I don't know. It's up to you. SpaceX will have earnings Tuesday, so you're gonna. Well, good luck. Good luck on that. I don't know if I would play that one. Let's see. Palantir earnings, I think, is Monday after the close, or is it next week after the close? I gotta double check that one. I think Palantir. I'll be watching that. So that'll be the next big software name to go. Microsoft is okay. We're safe with that. So let me see. Let me see if Palantir is after close. Yes. So Palantir will be after the close. That's right. All right. So Palantir after Monday's close. That'll be the next software one. Um this screenshot of the new GTA 6? No, apparently. Well, yeah, maybe. You might as well put Trump in there because Trump now is offering early tweets. So you can get Trump tweets earlier than everybody else if you pay $100,000 a month. Are you willing to pay $100,000 a month for insider trading? This is the world we live in. Legal insider trading, but you just have to pay to get in. All right, this is an exclusive club, so $100,000 a month. So do I want to buy Donald Trump stocks here? DJT. DJT is the Trump Truth Social, so they will charge you a fee to get Trump's tweets early on Truth Social. So, and I was saying, I was looking at DJT. I was like, huh, this stock looks like it's bottoming out. Maybe this is a good stock for a while, huh? DJT. Maybe I should get some DJT. So I'm gonna be looking at that too. Okay. All right. Let's look at the cycles now. Interesting things upon us. Let's review. So Here we are. Come on. This uses a lot of my memory. Oh, I need more memory. I need a new laptop. Fuck. Okay, so this is the NASDAQ futures. Okay, going all the way back to 2009 up to January 25th. So most of the Biden era here, Trump first term, um, Biden's term, and Obama's term. So that's pretty much where we're at. So this is the main thrust that we should be looking at for cycles now. And here we have it for the weekly. So this is a long-term cycle. So we have a 180-week cycle here. As you can see, we were about to break down on the tariff, but we tacoed, and that allowed us to fly high and avoid any problems going into February, where we did actually start heading into a bottom into March. So this says that we should have good times until September 2027. September 2027. So based on this prognostication, the next time we actually will have a real top will probably be around October 27th. So the top that was about to happen here, we tacoed out of. So that's why I say, like, I think Trump and his Treasury Secretary Bessent know what they're doing. They know how to manipulate the market to avoid any issues. So you can't bet against that. As long as Trump's around, he will try whatever it takes to pump the markets to the next level and the next level up. And now that he has Kevin Warsh in, he doesn't have Jerome Powell. We have Kevin Warsh, we have Bessent. These two guys together working in coordination should make it very nice going into next year. You should make a lot of money going to next year. Believe me, this bubble is going to be insane. Probably they will engineer a bubble the likes of which you have never seen before. All right, so that's what I'm looking at. Okay, so let's see. What's the other image I want to look at here before we continue? So this is the thumbnail. This is the thumbnail right here. Breaking: U.S. Treasury Secretary Scott Bessent notepads appears to reveal a plan to buy $10 billion worth of Japanese yen. I like this reply. Man wrote a $10 billion currency trade on a notepad like it was a grocery list. Eggs, milk, 10 billion yen, dry cleaning. So I told you guys to look at the yen. I've been talking about the yen. Samantha LeDuc's been talking about the yen. We got the yen trade right here. Obviously, Scott Bessent knows people are going to take pictures of his notepad. He did this on purpose. Okay? It's to scare the traders. Anybody trading currencies that was shorting the dollar, okay, or shorting the yen, I mean, my bad, shorting the yen got blown up. So this is a message to them that you try this again and he's going to make you suffer. So this is more of a warning. Okay, this was a warning shot. So the Japanese, they assumed did this, but maybe it wasn't the Japanese. Maybe it was really the US Treasury. So the US has a stake in keeping the yen where it's supposed to be. Okay, this world runs on liquidity. So I kept talking about like the liquidity cycle stuff and that. All these things affect bond prices, all right, and bond yields. So the bond price moving up and down because of currency changes, these are important things. And of course, they will affect other things too, right? Down the line, silver, gold, and stocks. Okay? So that's why you need to know these things. If you think Nvidia stocks don't go up and down because of the yen, you were proven wrong in 2024. If you think Micron and SanDisk does not go up and down because of the yen, and then therefore the Chinese yuan and the Korean won, you again are sadly mistaken. It has nothing to do with the actual company's performance. It really has to do with how much money is in the system available to buy the stock. If there's ample amounts of money, the stock will keep going up higher. And you have to remember that when the Korean market started topping, it was because the Chinese pulled out. They told people you were no longer allowed to go through Hong Kong to buy foreign stocks. And I'm thinking what that really meant was, can you guys stop using money to gamble in the Korean markets? Because we don't like that. We don't like you guys creating a bubble out here. And the Chinese have come out before to stop bubbles. They've stopped their own real estate bubble. They crashed it on purpose. They stopped the Bitcoin bubble. They crashed that one on purpose. They did a lot of things on purpose. Their tech companies also, they crashed on purpose. They did a lot of things on purpose. They like to control where the market is. And in the converse, you see Trump trying to go the other direction. He wants to pump up the US markets. Okay. So you see a lot of symmetry here where the United States is now acting more and more like the Chinese, but in a different way, in a different manner. All right, let's see. It's worth it for the high frequency traders. I think they get a few tweets at a fraction or a couple seconds before everyone else. It's an admission that his tweets move markets, though. I don't know if that can come back to haunt him. Probably not. I don't know. You know, his buddies will get all that information ahead of those people that paid 100,000, right? So how much will you actually benefit, though, is the question. If the people he actually gives information out to first, like his son-in-law or whatever, if Jared Kushner gets all that stuff ahead of time before the people that paid 100,000 get it, how much edge are you really getting? Ask yourself that. If you can't make it profitable, then it's not worth $100,000 a month. I mean, you're gonna have to go to Poly Market and all these other places and try to make sure that you get it ahead of most other people, but you know in the back of your mind that someone else gets it ahead of you. And he's just he's just tapping into your greed, your necessary greed that, oh yeah, I want to make some money fast. Anyway, greed always runs the show. Greed and fear. Greed and fear. Okay? Alrighty. We done with that. We done with that. Let's get back to the cycles now. How do I get rid of this thing? Maximize. Okay, back here. Where was I? Okay, so looks like yeah, August, late August, October going into early 2028. So 2027, 2028, somewhere around here might be the place where we should expect another top. Will that be the top? Will this be the final top to end all tops? Will this be the end of it? That's the question, right? Otherwise, we're going to have to go on to 2030s over here. Maybe that will be the big top. One of these will be the final big top, right? We've been going along for a while. We've been dancing here. Things seem okay. So that's what I wanted to show you. Now let's look at semiconductors. I think semiconductors is a bit different. Okay, a little bit different, maybe slightly different. So the bottom here was like January 26th going into March. Yep. So this was the bottom there based on the Iran war, perfectly timed. I think there's a reason why it's been timed like this. So that's how it is. Okay, let's get to the semiconductors. Let's look at that one. So that's the good thing about cycles, right? It saves you time. You don't need to waste time guessing where you should put your money in. So, okay, let's scale it back. This big blow off, I don't want this. I don't want this in the data. I just want to get all the way up to 2025 here. Okay, so pretty similar. 176. Okay. So, yeah, not much difference. Not much difference. The same pretty much here. You can see this is kind of like if you start seeing something outside of the way the cycles are telling you, because the cycles are saying that this should be where you look to buy the dip, but we've been having a nice big old super rally thanks to Korea all the way up here and earnings. So that, what does this mean? This tells me that like it's potentially going to continue on up, but is that going to be true? That's my question now, because this has kind of been, if I take this data up to now, this is probably going to affect things. I think we have to consider it as changing the way the cycle should be. So I'm going to add that to the data. So now we start seeing this. So what used to be this 180 week cycle looks like it's turning into a 122. Is that what's happening here? Are we not going to trust in semiconductors anymore? Are semiconductors going to bottom out in October 2027? If that's the case, if this is what's going to happen, if we're going to go sideways or down from here on semiconductors, then who's going to replace it? Because the NASDAQ will still want to go up. If the NASDAQ wants to go up, that goes back to my thesis many months ago, right? I said, like, eventually semiconductors is going to run out of steam and somebody else is going to take over. Who's that other one? Software. Software. So let's look at the software cycle. Let's see what's up with that. So this is the broad software index, Dow Jones. So I'm going to look at the software, see what happens here. So if the cycles are changing, then we're going to have to look at the software. That's the only other tech sector that's has to catch up, play catch up. So if one goes down, the other replaces it, right? Because semiconductors has been leading the Nasdaq up, while software has been lagging, dragging its feet, going sideways to down since October last year. Now we're in a new mood. Let's see what happens, right? We're seeing improvement in software. Microsoft probably is the way to be right now. So look at that. I see the RSI making a higher low here. I see this making a higher low here on price. And I see the cycle says we are bottoming out going into September, October, and then finally we'll escape out of this going into January to March next March 2028. So January 2027. So next year probably will be software's time to shine. So prepare for the final sellout. So if anything's pumping in semiconductors this month, it's time to finally close out and exit and get into software. So we're going to have to look into that. Okay, so this is what we're seeing here in the weekly. I don't know if this is going to come true or not, though. All right, this is just a little side quest looking at the cycles here. But it has been a long time since we've seen any improvement on software stocks since September last year. And if you look at it, the way it outperformed anything was very minimal. It barely did anything. Semiconductors was the place to be. That's the real reason I went into semiconductors, because if you looked at the software cycle, let's say we ignore all this going up into December 2024. If you looked at the software cycles, you could see it was going to be weak for the whole time. If you looked at semiconductors, it did not look like that. Semiconductors bottomed out in April 2025 based on the cycles. This one, the software, looks like it was bottoming out here around March to May. March to May is where we would have been having it. And it looks like that's happening. So bing, bing, bing. Bing, bing, bing. This is where we have to look at Palantir again. Palantir will probably go 10x higher, right, into next year. We have a whole year next year for software to play catch up. So if that's true, then guess what? Who's gonna be the winners? Palantir. What else? What are the other ones? We've already talked about like a whole bunch of cybersecurity ones. I don't know. Are those going to continue? Maybe we should look at Adobe again. Adobe garbage. Adobe, right? Maybe Adobe will catch up. I don't know. How about Figma? Figma, wasn't Figma supposed to be bought out by Adobe or Microsoft or somebody? Maybe we should go into some trash like that. Any type of garbage in software now has to be looked at seriously, because if this is true, then as the IGV and the other software ETFs go up, the cloud, sky, whatever, Cloudflare, all these guys go up, then it's going to lift all the trash too. So any kind of garbage like Adobe is going to ride up there too, and people are just going to chase it. They're going to be like, hey, what the hell, Adobe's going back up, and they're just going to take their money from semiconductors and go back. That's how money gets made. Money goes from some one sector, they go to another sector, they go to another, because they're always chasing. And your job is to find the places where it's about to go and turn and go there first before everyone else, not wait until some young buck, some young blood from Germany, who apparently had his wedding today or yesterday, and and then some Ken Griffin came around and just mugged him in front of his friends. Crazy shit. All right. So there we are. That's what I'm looking for. Okay, what else? Let's look at oil. Let's look at crude oil. Let's see how that's gonna go. Crude oil. How's crude oil going? Okay, let's get this. Let's do this. Man, is this the weekly? Yeah, it's the weekly. It should be the weekly. Okay. Let's get the add some data. Let's add some data. Okay, and get rid of this. Let's go all the way here back to September last year. So this is how it looked like before the pump up this year. And if we look at the cycles, which one was dominant? I guess this 140 was dominant, and maybe this 264. So this is how it looked like before the big move up in oil, and this is one of the reasons why I was like, oh man, we should just get into oil. Yeah, I mean, it looks good on a technical basis. Looking at the chart, it looked good on a relative basis. Looking at the chart, when you do the ETFs for oil companies like XLE or XOP divided by SPY, it looked good there. People have looked at the futures market and determined that there were a lot of commercial traders and big industry groups buying up oil. They were, in the sense that they were shorting it less, because traditionally, if you shorted oil, it was done as a way to protect yourself from lower prices. So if I'm an oil producer and I want to protect myself from lower prices in oil, I short in the futures market. So that's a form of insurance. So that's why ExxonMobil or Chevron doesn't have to worry if oil drops below $60 a barrel or $50 a barrel. You have to remember, everybody was thinking that oil was going to go down to 60 and lower. JP Morgan, Goldman Sachs, they were all bearish at the end of 2025. But this was telling me wrong. This was not going to be the case. Something was going to make it go up into 2027. Does cycles predict the temperaments of Donald Trump? No, probably not. But it does probably predict some kind of innate nature of human behavior, where you probably have wars in the Middle East at certain intervals. I think it's very predictable. You're going to have a war in the Middle East every so often, and it has a repeatable time factor to it that keeps on appearing over and over again. It also has something to do with world economies. Stronger economies means more demand for oil, right? For energy products. And we are in a strong global economy. And despite what most people would say, I would say that probably some of you don't feel like it's a good economy, right? Inflation is very high, but for some others, economy is very good. If you look at San Francisco real estate prices, they kept being overbid $1 million over the asking price because the competition is so high due to everybody wanting to live here to be close to the headquarters of OpenAI, Anthropic, and who knows what other stupid little internet companies are out there. I mean, Cloudflare, um, Pinterest, freaking man, there's a whole bunch of them. Yeah, they're all in the same little area on Townsend Street. If you go down to Townsend Street and Second Street, the whole place is just packed with internet companies galore. So yeah, there's a whole reason why I guess this would happen. So this is what's happening now. Okay, so this will end sometime around September, October 2027. So that was what we said already 6 months ago. I said this thing could last up to then. The other signal was that gold. If you look at gold, gold predicts where oil will be. That's what McClellan says. Shifted by about 19 and a half months. So whatever gold does, you can look ahead 19 and a half months later and you'll see oil do the same thing. So that also was another piece of evidence to predict this. So I don't have a crystal ball per se, but if everything lines up so well, if enough signals tell me so, then I'm going to be bullish on oil. And that's what happened. And I have no insider knowledge. Unless you guys have some insider knowledge to give me, I have no clue what's going to happen. Okay? I'm just going to use this to tell me what's going to happen in the future, I guess. Okay, so we have a while before oil taps out here. So I think we're fine. I think we're perfectly fine here. If I take all this data and put in the new stuff, I don't think it changes much. So let's remember 140, 264. So let's see if those cycles still matter with more data. So we still have this small one. We have these small ones. Yeah, I think it's pretty much the same and nothing really changed here. No. So no change in the cycle so far with this impulse. Unlike semiconductors that move up really change things. It really affected things. So that we'll have to watch that more carefully because we might be entering a moment where we can't say that semiconductors will continue on up until like sometime in 2027. Okay, how about gold? Gold changes a lot, the gold cycle. So it's not really that reliable, honestly. There's too many things that come into play with gold. So that's why you can't really rely on it too well. So let's say we're up here to 2023, right? So let's look at the data from this point of view. What did the cycle say? Cycle said this. So this was correct. Gold was going up into January 2025, but after that, it said like gold should start going sideways or down after that until we got to November 2026. So what's this? Why did we start going up still? Well, there's a big difference here because Donald Trump got elected and then he started talking tariffs. So I think once he started talking tariffs, this whole cycle started not working anymore. Once you have that influence of the tariffs and the threat of tariffs, people think like inflation is going to increase. So they're going to keep on buying gold. Another thing would probably be that once Trump got elected, the Chinese went crazy and started accumulating more gold because if you have Trump there, Trump is pretty much anti-China. So that's going to affect how Chinese will look at the dollar. The Chinese do not want dollars anymore. If you're going to have presidents and politicians that do not favor China, they are going to try to get out of the dollar system, right? So they're going to accumulate gold. That's what's happening. So all these central banks that's accumulating gold, there's two reasons. The Turkish government will accumulate gold because they want to protect themselves from inflation. Turkey has about 30 to 50% inflation year over year. The Turkish economy is insanely inflated with the weakest lira versus euro and dollar. So if you want to travel somewhere on the cheap, yeah, go to Turkey. That's one problem. So that's why there's some governments that will accumulate gold for that reason. But the other reason is that the Chinese are just buying it up because they have to get out of the dollar. The only way to get out of the dollar is if you need to have another currency that is based on something outside of the euro dollar system, right? The dollar milkshake we already talked about. So what's that? Where you want to go? Bitcoin or gold? Those are two options we got right now. What's the other options for a new currency? What's going to be based on? If you're gonna switch out from one place to another, you have to go through something that people trust, and people have trust gold for a long time. So yeah, it makes sense. They're gonna run to gold. Okay, so that's probably what's happening here. That's why it's affected. So what's the news cycle then? What is the news cycle if it's no longer this 245? So let's get all this new data here. So let's see what's the news cycle. Okay. Okay, let's see. I think I saw something at 400. Now, this is gonna depend on which thing. You see this like this huge fat tail coming up here to 400? Yeah, there's something up here that is going to start dominating. There's something over here that starts dominating. So you have this 185, and then now you have this 388. So this is going to dominate now. Something here. This guy is the news cycle, I guess. And then we have another one at 185. Okay, so let's see what the 185 says. 185 cycle bottom will be September 2027. So that's why I'm pretty patient about gold. Gold will be boring for a very long time when it wants to be. When it wants to be exciting, it'll be exciting. When it wants to be boring, it'll be boring. And you got to be patient. If you looked at COVID, look at it. Once we got to the peak of COVID, it took about um, more than I guess 2 years. This is probably about 2 years before we started doing something in late 2023. We started moving up again. So don't be in a rush. You can just make money in semiconductors, oil, and other stocks while you wait, and then you can come into gold sometime around late 2027. So I don't expect anything to move significantly. If you look at the daily cycle on gold, this is a bottom. We are at a bottom on the daily. But if you look at the weekly like this, you see the long-term cycle, it still says like we're going to be weak. So we're probably just going to go up a little bit, then go back down and go back up. We're just going sideways. You can trade it. Okay, this is probably a good time to buy gold just to trade it. But if you are looking for a more meaningful, longer term position, you can just keep your money elsewhere. Just go to the REITs, go to the refinery. Look at the refinery stocks. Come on. If you stay in gold, if you park your money in gold and you go sideways, you have opportunity cost. This is one of the major reasons why people just don't make money, right? Because they just park their money in something that does nothing for a long time. And gold has gone nowhere a long time before. Like look at 2011. Look at it. Sideways, down, sideways, up, sideways. So until we got to around 2019, nearly looks like 8 years, 8 to 9 years, you went nowhere in gold. But during that period, those 8 to 9 year period, you could have been in Nvidia, AMD, Tesla, anything else, tech, and you would have made a lot of money rather than just going flat in gold. So be patient, you know? You can go somewhere else. You don't need to stick around gold. So anybody telling you like, yeah, go back to gold, go back to silver, I'm just like, there's a better chance somewhere, some other time. I don't need to rush back into it. So that's me. I'm not gonna rush back into it. All right. So that's my feel about it. We don't have anything for Bitcoin on that time scale because Bitcoin is relatively new. I don't have data going back all the way to 2000, 1990s. So Bitcoin, I wouldn't use the weekly cycles because Bitcoin is just too new, too new. So we can't use that to figure out if this is the best time for Bitcoin or not. But I would say like we will hit a bottom fairly shortly. So I'll just cover Bitcoin a little bit here. Let's just do this. Bitcoin. Okay. UCD, is that it? I forgot. Is that it? Let's see. I'm not going to do the weekly. Okay. I'm not going to do the weekly. I don't think that's meaningful. There's just not enough reliable data to do the weekly on Bitcoin. I'll just do the daily. Daily's good enough. Okay, let's see. I don't think much changed. We still have this 260, 250 thing here. So somewhere around November. So Thanksgiving. Okay. So Halloween, Thanksgiving. But we probably won't start accelerating back up until New Year's. Okay. Because probably people will sell at a loss down here for tax reasons. So if you have something that's a loser during the year, it usually stays weak as into like December. And that's the time once you get into December, then you could start thinking about buying it back up because all the people that want to sell for tax loss purposes, they'll start selling in December, going all the way down. All right. And then we'll move back up into May 2027. So that's where we'll want to look for a real bottom. But we probably will just go sideways for a while. There might be some trades. You could probably trade it going back up. If you look at the short-term cycles, I mean, I don't know. So there's this like 60-day cycle. Yeah. So we're at a bottom coming into August. It looks like it could probably pump into September before crashing again into October. Election season right here, right? Election November, early November. That's probably makes sense. It goes up into September, probably goes back down into November. I think this will also be how the S&P or the Nasdaq will be. It'll just be like whoop, go up into September and then crash into October. Now, what's the day for Jewish New Year's? So I gotta find Yom Kippur and Rosh Hashanah. So usually I look for those dates. Let's see. Rosh Hashanah will be September 11th on Friday. So September 11th, you should start seeing weakness appear around September 11th. Okay, up here. So somewhere here. And let's see. September 20th to September 21st. Okay. So yeah, so around this peak. Yeah, okay. So somewhere around this peak, we'll probably have to worry about that. Okay. So September 11th through September 21st. So let's look at the GSPC. So let's look at the S&P 500. Let's see how that one looks. We have like an 80-day cycle, small cycle. Okay, this one's the fastest. Let's see. Yep, September 10th all the way to 21st. Yeah. So somewhere between September 11th and September 21st, I probably will be looking for a top. So that's between Rosh Hashanah, Jewish New Year's, and Yom Kippur. All right. So you should know your Jewish holidays. Very important. Yep. Let's see here. Blah blah blah. I'll see here some of your chats. The president can publicly make insider trading one of his many side businesses, but you can't withhold your income taxes for 1 year. Yeah, well, ain't that something? You're gonna talk about the hedge fund. I already talked about the hedge fund blow up. Uh what was that? Thursday night, Friday morning stream. So yeah, I already talked about that. I don't. What else is there to talk about? You want me to talk about his wedding? I wasn't invited to his wedding. I was not invited to his wedding. I did not go to his wedding, so I can't give you any more information than that. Okay. That's all there is to it. I think it's pretty obvious. Like if you're gonna leverage, that's what you're gonna happen. You're gonna get smacked around by the big boys. They know your weakness, and they'll come around and take your shares for pennies on the dollar. That's what happened to that guy. But if you actually take the time to know cycles, you probably wouldn't you wouldn't care. You wouldn't care too much. You know when to come in and come out. All right, I showed this picture before about the high yield bonds. All right, the accumulation, not accumulation, advanced decline line. So the bond market is looking bad. That's one thing we've already seen. Now the yen is probably making things worse right now because one of the stuff that we looked at, articles I read, was that in order for the dollar to weaken and the yen to rise, the Japanese would have to sell bonds, right? The article I read said that they made sure to use like low duration bonds to sell, like basically 2 year, 5 year, 7 year, 10 year. So they'll try to do more 5, and 7 and less 10, right? And avoid selling 20 and 30-year bonds. Um, of course, right now the 30-year yield is very high from last week. So is that really true? Did the Japanese really not sell some of those bonds? And now that you got that little notepad saying that the Americans, the U.S. Treasury is trying to help out the Japanese by selling euros. So the euros are also in trouble. So you're selling euros to prop up the yen that way. So we're selling euros to buy yen. So I'm confused as to what the hell's going on here. So should the euro be going down? So I have this tweet. I have this tweet from McClellan. This was yesterday. Before this week's combined BOJ, so Bank of Japan, and US intervention in the yen, the big commercial traders of euro currency futures were back to a decent sized net long position. They tend to skew to the short side, so just getting to here is a bullish indication for the euro. So people were prepared to buy up the euro. Hmm. Did the US government tell people to protect the euro as they were dumping it to help the yen? What the hell is going on here? Very confused, man. So there's a lot of things going on at the same time, and I don't even know how to even decipher this. How do I even look at the yields and the currencies? Nothing makes sense right now. I don't think anybody really understands the full implications of this. These effects might not occur, or the result of these actions might not occur until like a year down the line. Whatever manipulation is happening now, yeah, maybe somebody will pay the price in a year or so. Whoever he is marrying, I'm sure she's doing it for his personality. Well, she's actually let me look it up. I think she works in AI too. So they are the elites, they marry for a purpose, right? Yeah, people do not marry for love once you get to that level. I'm sure. So I don't know. Let me see if I have an article, because all the articles are paywalled. They're all paywalled. So this is all I got for you. So if you really are interested in this guy's wedding, I don't have an unpaywalled account. I'm not gonna pay just to read this stupid shit. All right, here we are. This is the excerpt from it. So this is probably the first several paragraphs of this article. His wedding guests were arriving just as his $45 billion fund was falling apart. Leopold Aschenbrenner was hailed as the Nostradamus of AI, but his situational awareness hedge fund took on too much leverage, leading to a crash he never saw coming. When the week began, Leopold Aschenbrenner was preparing for his wedding. The plan was for a multi-day celebration in Carmel. Uh, Carmel is a very nice place. Okay, if you ever been to California and want to have some place that's quiet, away from the riffraff, you can go to the Central Coast. So Carmel by the Sea is south of Monterey. Okay, San Luis Obispo. So you can go down by the coastline down there. Very very quiet, good place for no noise. Okay, so that's probably a nice spot to have a wedding. A seaside town in Northern California with the ceremony at a Tuscan style villa and the send off at a spa in the forest. There would also be a pre wedding colloquium. So this is not a wedding, but actually a conference, a symposium of AI people to discuss ideas in panels and breakout sessions. The couple's only request: no gifts. The 24-year-old investor has amassed a fortune by promising he could see into the future, building a $45 billion investing powerhouse that primarily bought stocks in the AI trade. For months, the holdings of his hedge fund, Situational Awareness, shot up in value, as did Aschenbrenner's standing in the upper echelons of San Francisco's elite. This guy could be my parents' neighbor, as far as I know. I don't even know, Shit. But by the time guests began to arrive, his fund was unraveling and Wall Street was closing in. Aschenbrenner borrowed too much money to make his AI bets, leaving him at risk as they faltered. With the value of his portfolio tumbling, he succumbed to raise cash, or he scrambled to raise cash to satisfy his lenders, appealing to some of the largest hedge funds and selling billions of dollars in holdings in a fire sale to Ken Griffin's Citadel. Yeah. There you go. Aschenbrenner's first made his way to California after graduating from Columbia University in 2021 at age 19. An early convert to the principles of the effective altruism movement, he began working for the philanthropic arm of Sam Bankman-Fried's crypto exchange FTX before joining OpenAI, where he worked in the niche field of AI. There you go. There you go. So, if you think this stuff isn't interconnected to each other, you're wrong. There's a reason why all the crypto mining companies became AI companies. They set up the infrastructure, and a lot of the concepts from tokenization to other uh, blockchain ideas have also, you know, trickled or whatever into AI. So there you go. And I think I could figure out who he's marrying. Let me see. Um, Brenner wife. Let's see. All right. Avital Balwit. Avital Balwit. She is the chief of staff to the Anthropic CEO Dario Amodei. So he worked for OpenAI, and he's marrying a chick who's pretty much leading Anthropic's AI. So are these people really competitors or what? You tell me. You tell me. Anyhow, this is so simple. So simple. Okay. Okay, that's it. That's all I need to talk about there. What else for the cycle stuff? Do I need to talk about the yields? Maybe I'll talk about some yield stuff here in the cycles. Let's just talk about that. So, 10-year yield. Let's do the 10-year yield. Let's look at that cycle. How we got for the 10-year yield. Okay, so let's see. We got two cycles here. One cycle is a 174-day cycle, and we have a 349-day cycle. So, this is saying that the yields should temporarily go down into October before going back up, but we've clearly kept on moving up. Will this slam back down sometime this week? We'll have to watch that. I don't think it's a good thing if we break 4%, 4.8%. So that was the previous top over here during the January. I guess the tariff stuff kind of like pushed things along up higher than it should have been over here. I don't know. This was the election up here. Not sure how much that affected things with the election stuff. Kevin Warsh has kind of like been, we're not going to be talking about it. So it's kind of hard to tell what's going to happen. Now, if you remember, I read an article about, let me see, the gold stuff. So I read that a week or a week and a half ago. I don't remember. But I read this, right? Gold's 20.5 month leading indication for yields. So this is McClellan again, and he's pushing out the gold signal 20.5 months to figure out where the yields are going to be. So I'm looking at the 10-year here. I think he's looking at the 30-year. But they should be similar. The way it's moving should be similar. 10, 20, and 30 should be pretty similar. They shouldn't diverge that much. And let's see, the next time we should be moving up will be October. Sometime October we should be moving up. So it looks like that's going to happen. But then this thing also says that we might just move back down into April and May 2027. So don't know yet though. That's going to be really dependent on a lot of things. I mean, there's this large cycle here of 350. Oh, this thing looks like it's dominating. It looks like it wants to dominate, but it might not, right? It might just be this is the dominant force here as we go along. But we'll see what Warsh does, right? He's supposed to raise interest rates. That's what people say. That's what the Wall Street is betting on. We're going to have higher interest rates starting next September. I mean, this September. That's the first raise. And then next year, uh, on January, we should have the second raise up. So that's what we're going to be looking at. Okay. Anything else? How about the dollar? So I can look at the dollar index. Let's look at that one. Let's look at that. See what that one says. Okay, I think this one's pretty stable. We've been having this 180, this 180-day cycle. So right on schedule. Just as we were about to go up again, we got the Japanese intervention, and now if that continues and we stay going sideways, then sometime in October it'll be the end of it, and we'll start shooting back up on the dollar. I don't know how that will affect things. But maybe sometime in September, we should be worried that the dollar might start moving back up. That's probably when you're going to see the crash. When the dollar starts shooting back up, that's when you know like it's over here for now. So sometime in September, I guess, Jewish New Year's into Yom Kippur, expect trouble happening. Okay, somewhere along this area, the dollar will start rising again. That's probably where you're going to be worried for another market crash. Okay, next one. Let's look at the dollar euro, since now, well, the Dixie is already dollar euro anyway, but let's just might as well look at it. It should be similar though. This should be similar. Yeah, it looks pretty similar. We got this 211 days, so similar to the 180. Yeah, okay. So this one says that the bottom will be sometime October, November. Yeah, similar. It's similar. So September. September. Wait for a crash in September. If we make it through options. Okay. We have to make it through the options though. Expiration. So if we survive, we could probably have we could have it still go up into the end of August, and if you're lucky, maybe a little bit more the first week of September. And then when we get closer to Jewish New Year's on September 11th, then bye-bye. Bye-bye. Going into Yom Kippur, we're just going to go back down. So that's the prognostication I got going on for you. Okay, we're done. That's all I wanted to say. Anything else? I don't think so. I don't think so. Okay, that's good. All right. Okay, let me see. I'm gonna play some videos. Let's see some videos. Do I have videos to play? I got some videos to play. Okay, we're done with an hour. Perfect. We're done with an hour. So I want to play some short videos, and then we're gonna discuss software and China. Those are the two things to discuss today. Software and China. Look at those stocks. Revisit the Chinese stocks. How did they do this week? They had a good week. Chinese stocks had a good week. So overall, this month has been very kind to the Chinese stocks. Okay, let's see. What do I have here? Oh, okay. Let's talk about Bitcoin again.
We have seen here a lot of volume, the highest volume signature on the weekly basis for the ETF. So there's institutional activity at this point, no doubt. Then we had this bar, which was trying to break the support with some volume signature, so a spring pattern. But I have to say that so far the recovery looks very weak. This is not the classic spring that we want to have. Generally, the spring pattern is this. We have the failure to make a new low and a quick recovery. Here instead we are hesitating, and I would be not surprised if next week, especially if the market shows more selling pressure, we could come back to the support again and continue to be stuck in this area. I'm not shorting this market. Bitcoin has been already in the extreme oversold condition for several weeks. I don't see any edge in trading this market to the downside. If you want to short, you can go to semiconductors and establish trades to the downside there. I see this market as an oversold market, and generally in these conditions, when the market is oversold and the overall stock market conditions are negative, what happens is that we don't have that famous spring and we continue to consolidate in the lower part, making this very tricky lower low structure, but still in the boundaries of the initial trading range. We were looking for a spring in phase B without big expectations. If you have bought around this area with a stop loss, that's okay, but we have to be prepared for a very torturing pattern like this. Boundaries of the initial.
So I like this. This is exactly what I expect. And once you add all that cycle stuff I just showed you, yeah, it's probably going to look like this. So there's no rush for you to get back into crypto. That's why I've been telling people. You could wait all the way into December, honestly. There's other places to be. You don't need to put your money into work over here. And what is it? Michael Saylor reported earnings with MicroStrategies, or renamed his company's strategy only. Was it Thursday after the close? And yeah, they're gonna sell like what, $1 billion worth of, or $5 billion worth of Bitcoin. So you're gonna have selling pressure there anyway. So there's no rush. There really is no rush, in my opinion, to get back into this. Okay, that's it. What other? Got anything else? right, let's look at this one. Let me see what this one is about.
This chart reminds me of Bitcoin in 2017, that big peak there. Now we are getting a lot of rumors, news, the headlines highlighting this big correction, and we are right into the 200-day moving average. And today we had this demand tail. What do you think here?
You know what's interesting? Me and you have never talked to Lucio, but I follow this Kospi Korean closely, and it's been pretty much a one-to-one correlation ahead of the Nasdaq. It's been a leader, which has been pretty amazing. I think you're right. It's coming into support, and usually a bounce in this index, at least over the last several months, has preceded a bounce in U.S. equities. The reason for that, I have no idea. I'm sure someone way smarter than me has that figured out. But
it's a classic intermarket relationship where we have the more speculative indexes which are leading, so it's common. I always pay attention to the most speculative assets. They tend to anticipate discount the market.
Plus about 6 or 7% yesterday. I remember seeing that and thinking, you know what, we're probably going to flush today. And what happened? We flushed. It's pretty amazing.
So for the first time, we have this small demand tail. Let's see.
So you had SK Hynix, you had Samsung, everything was completed on Tuesday into Wednesday, okay? And so, like I said, the ones that will benefit the most, SanDisk and Micron. So there you are. SanDisk will have earnings, all right? We will have earnings on SanDisk Thursday, I believe. So let me see. Let me see what we got. Wednesday after the close. Okay, Wednesday after the close. So there we are. SanDisk will report earnings. And let's look at this image here. So let me show you this one. Let's look at the margin accounts. Let's look at the margin accounts. Margin accounts. Here we are. So, outstanding stock margin loans decline. If you guys remember, if you look at margin accounts, when they start rolling over, that's when big problems start appearing. Okay. Now, for the US markets, this is a great way to determine if a big top is about to happen. Okay, usually the margin accounts of U.S. stocks, U.S. Stockholders with brokerage accounts in the United States will start dropping, or at least flattening out. So the rate of change starts decreasing. So you will see the margin accounts get less and less, I guess, aggressive. Okay, just ahead of the top. You can kind of see it here, I suppose. If you get to May to June, that was like a big move up in margin accounts, but then it started weakening in the first week of June. I think that was the first time we had like a nasty crash in Korean stocks and Nasdaq stocks before it kind of tried to recover a little bit, but you can see it's already weakening up there. So the green line, it's not making a really significant new high compared to the one you got into late May. Now, if you look at Chinese, yeah, the Chinese, well, they got blocked by their government from buying foreign stocks. And the Chinese stock market itself also had like little speculative AI companies, and those got hit at the same time. So you see it start moving down. Taiwan, similar story. So all these guys start weakening and rolling over. I think the U.S. market, it's more like a bellwether ahead of time compared to these. I don't know. Asian markets are not something I looked at. Okay, so I don't know the characteristics on what's normal for Asian stocks. Like Asians probably gamble a lot more than most other people. So maybe you can't tell if an Asian market is about to implode using just the margin account stuff here, because from what I could see, this is not of enough ahead of look ahead time here to determine if there's a top. So let me see if I can find where. the US example. You can get it from FINRA, and I talked about this before. FINRA. So you could probably search in the YouTube. You can go search FINRA, and you'll probably find it. FINRA margin. Maybe one of my videos I put that keyword in there. I'm not sure if I was nice enough to put a keyword. So let me try to find the picture. I can find a picture of it. Let's see. Okay. All right, here we are. So I've shown this picture to you guys before. Okay, so let me get rid of this. Hide this. Okay, and I can customize it. I can zoom in. All right. Yeah, I can zoom in. I can move it around. Okay. All right. So you can see that here. Let me get rid of this thing. Move that. Okay. So falling margin debt growth from high levels triggers a sell. For US markets, if you see the 15-month rate of change go up above around, I guess, 50%, and then you drop back below 50%, that's a sell. So last time we had that signal triggered was November 2021, about a month ahead of the actual top in the S&P 500 before the great correction bear market of 2022. I don't know. I'm just being exaggerating here. I'm just exaggerating when I say that. It's not really a great bear market. It only lasted 1 year, but it felt pretty bad, right? Because a lot of people that chased markets up during COVID into 2021 and did not sell after February, March, like if they did not notice that biotechs, SPACs, cryptocurrencies all had a bad time after February, March of 2021, and they held on to Nvidia, Tesla, and all the large cap stocks, and they thought they were safe, they were very much mistaken, because by the time we got to January, bye-bye, everything started selling off because everybody was holding on until New Year's to sell off. They didn't want the tax implications of selling in 2021, so they held it all the way into New Year's. And the first couple trading days after New Year's, you started noticing weird stuff happen in the bond market. So the bond market was already going bad because Jerome Powell said he was going to raise interest rates sometime just before Thanksgiving, or maybe it was like after Thanksgiving. It was like the Black Friday of Thanksgiving. He said something. I don't know. It was quite weird. But he was getting very nervous. He was like, oh no, inflation is too sticky. This is not good. And yeah, that's what happened. So yeah, you could also use it to buy stocks. If the 15-month rate of change rises above negative 21%, you could buy, but that's a bit too late. As you can see, we have other ways of buying the bottoms. You don't need this signal to do bottoms. We have the percent bullish index. We have the greater than 50 EMA or SMA. Yeah, we have lots of other ways to figure out a bottom. You don't need to use this thing to figure out a bottom, but this is pretty good to use to figure out a top. So some signals are better off as topping signals. Some are better off as bottoming signals that you can use to find bottoms. So as long as you have a lot of stuff in your toolkit, it's not hard to figure out the major turning points of the markets. So yeah, this one is very good. I like to use this one. If you want to apply to the Asian markets, you're going to have to get more data for me. I don't know how well it works for the Asian markets. I think the Asians work a lot differently than people that buy and sell S&P 500, right? People here have a long history with the stock market. Asia doesn't really have a very long history with stock markets. It also has a very negative relationship to stock markets because most people don't trust stocks like they do in the US. They like to use real estate, but the younger crowd in Asian countries are pretty much locked out of the real estate market after the Chinese blew up their bubble. And in Japan, it's unaffordable. I don't think any young folks can buy or Taiwan or South Korea. I don't think any of them, same problem as the US, any of the younger generation can afford houses right now. So they go to stocks and they go to crypto. Okay, so that works a lot differently. Let's see, blah, blah, blah. What else? Do I have something else? Oh, okay, let's look. We're going to go into software right now. Okay, we have to change topics. So this is the what we see in the software. So let me get this image here for you. All right, so I got this nice image. All right, let me zoom out. That's too much. Okay. Performance of different software indices reveal who the market expects to be winners and losers. So I like this one because they break down software into different sub sectors or industries. We have US vertical software index in, I guess, dark red, maroon color. US infrastructure software index in the orange, tannish kind of gold color, and US security software index, light blue, cyanish security software. So that's the cybersecurity. That's the one we know about. And application software, dark blue. So that's at the bottom here. All right, that spent most of his time at the bottom, dark navy blue. And then we have the teal, the total aggregate software index. That's the one I just did the cycle analysis for you guys, the weekly cycle analysis. So you do all these sectors combined into one big software index, then this thing is in between the leading guys and the losers. So, okay, so we see who the winners have been so far, and we see who are the laggards, right? Oracle, Microsoft, Adobe, the losers over there. And then we have the winners. We have CrowdStrike, Palo Alto Networks, winners. So now it's time to look at the whole shebang. So I got to look at the whole shebang for you guys. I don't know. That's what I'll spend most of the week doing. That's what I'm going to have to do. I'm going to have to look and pick and choose which ones will be the best. And from there, we can go on and decide, okay, who's going to be the new winner. All right, so let me see. Let me find it. Oh, man. Where is it? Oh, did I put it here? Did I put it there? Did I put it where? Man, let's see. I didn't put it in that one. Let me see. Stock charts. Let's see. Okay, let's see. I got this. Okay, I got this. All right, so which one's this one? This one was, okay, broad software. Good. And then I had another thing to show you. Let's see. Okay, the silver crosses. I'm not going to use that right now. Okay, and then I have sector summary. Okay, let's look at the sector summaries. What are these? These are different software ones. Computer services. This one's in hardware, not really related, but that's fine. Okay, and this. All right. Okay, now I'm going to show you that. Share the screen. Okay, good. All right. Let's get rid of this thing here. Okay, let's see. All right, share screen. I guess I can't get rid of that. Get rid of that label. Go away, label. I guess I can't get rid of that label. All right, fine. Okay, good. I got rid of that label. All right. Okay. Let's see here. Okay, let's see. We got broad software communication service. Well, this is loose, okay, because I got Dell in here and some other ones. I just went to all the ETFs, the cloud, the cloud, sky, bug, cyber, IGV, FDN. So I went into everything that's software, communication services, and just grouped them into one big mess. So I took all the top like 20 holdings of each of those ETFs, stuffed them into this big list. And let's look at the current performance. All right, let's look at the performance we have versus the S&P 500. So which ones? Let's look at the monthly performance. Which ones have done well compared to the SPX, the S&P 500? Well, we got one here, one winner. This one reported earnings, I think last week. Ring Central, RNG. So this one seems to be doing well. I guess you could say like Twilio and Band might be something that has relationship to the same area. So that might be, you might use that to compare to those two. Accenture, Procore, PayPal, Workday, Paycom, HubSpot, SPS Commerce, Q2, Bill. So there's a lot of these I never even like paid attention to before, honestly. But you can see what I'm doing, right? If I see semiconductors is about to enter a weak phase, like it's not going to perform very well in the coming 6 months, 9 months, maybe even a year, then I'm going to hide out somewhere else. Okay. I'm going to put that money somewhere else. And what's that something else? That something else is going to be in software. Which of these softwares companies are going to outperform? We already know about the cybersecurity. Okay, that's fine. But cybersecurity can't, keep on going up forever. Some of these weak losers like Adobe might actually do something in the coming months, right? We can't just keep chasing the winners all the time, because eventually those winners will just run out of momentum, and they might run out of momentum fairly soon. This month, this might be the end of the cybersecurity pump. We can't just rely on that. So let's look at the charts, right? Just look at some of these charts. So the good thing about stock charts is that like I can just like go over, like hover over my cursor over these names, and you could see like, oh, okay. So these are the relative charts. These are not the absolute charts. So these charts are actually this divided by the S&P 500. So I want to see which one is improving relatively compared to the S&P 500. And we could see some really good improvements here. Workday, Paycom looks really good. Hubs looks all right. So some of these look really good. I mean, I know why PayPal went up. It was because of the buyout news. Like somebody offered to buy them out on the cheap. Okay, so that was outside of the earnings. They did report earnings, but most of that move was already done by the time they reported earnings. So we can see Ring is the winner right now. Ring is the winner so far. Snowflake. Okay, Snowflake, this database company, looks like it's about to do some relative breakout here. Not bad. So that's what I'm going to be doing. We are going to look for these losers, and some of these losers will become future winners. Which ones we will pick. And so I'm going to try to figure out which ones I will add to the boomer portfolio. So this will be the first time we are going to dump this in the boomer portfolio, because I think for at least 6 months, it's okay to buy these stocks for at least 6 months. So I have to replace the losers of the boomer portfolio with some of these guys here, right here. I'm probably not going to add any semiconductors. I think we are done with semiconductors until next year. Okay. So if they're going sideways or if they're going to be choppy, I don't want to be a part of it. I don't want any volatility that comes in intrudes. If there's going to be volatility, it better be the good kind where it just goes in one direction, mainly up. So yeah, we're going to look at some Palantir, right? Palantir will have earnings. If Palantir is going to be a good boy again, yep, we're going to add Palantir. I don't know why they had Broadcom. This is semiconductor. I don't know why they put that in the ETF, but fine. D-Dog, yeah, we know that was a good one. Okay, eBay, yeah. Airbnb, Airbnb might be doing good. Okay, maybe Airbnb too. So yeah, you could see there's a lot of nice juicy ones. Zscaler, okay. I used to play Zscaler back in the day. Is Zscaler ready to stop being a loser? I don't know. Is it? Unity software? Ugh, I don't know. Zoom still sucks. So that's the homework this week. I'm going to try to see which of these are going to improve for the rest of time. Now, if you look here, they give you a nice grid, right? You can see the 1 month, 3 month, 6 month, year to date, 1 year. So Ring is green on all boards, right? Some of these Fastly, well, only the 3 month performance was bad, but for the most part, it's been a good stock. So this one, Fastly, looks good. Maybe this will continue on up. But Dropbox, okay, yeah, Dropbox has green here. 1 year performance is barely green. Looks like it's recovering from a bad low. NetApp, yeah, I've noticed NetApp and Nutanix, both of these have gone pretty well. So that's these two might make it on the list. Okay, yeah, sure. All right. So we see some winners right there. That's what we're going to be looking for. Okay, then we're going to look at China later. I'm going to bust out the charts for China. We're going to look at one by one on China. But the other sectors that have done well is computer services. This sector has been doing well. Okay. Oh, did you notice one of my favorite Chinese stocks is on this one? Right here, number 2, Kingsoft Cloud. There we are. So it had a great Friday. Let's look at how it is on the week. For the weekly performance, this is the 6th place. So it got 6th place. Okay. Ahead of Ring. So yeah, I think KC is one of those stocks that I'll just throw in the boomer portfolio just for the hell of it, even though it's high risk. It's high risk, high reward. But hell, you know what? I love the chart. I love this. I love trading it. It's one of the best ones. I think it can last 6 months. Come on, 6 months. We can at least get something out of it. Toast. I think you guys know a little bit about Toast. If you guys have a little business, a lot of the credit card readers, payment processors, they use Toast. That's that in competition with Square, which became Block now. Okay. What else? Rackspace. This is too low. Okay, we're only gonna look at the top percentiles here. So maybe this back blaze I've been hearing a lot about, and KC for sure. Maybe Ring. I don't know. Okay, I remember INOD, but INOD took a big fall. It got a 50% haircut. I'm not sure if I really want to put that in a boomer portfolio, but whatever. Toast, maybe I'll do Toast. Okay, what else? Software, pure software. Who are the winners here? Let's look at the week. Who did the week? Anything I know. Only Microsoft is the large cap we see so far, and Workday. Everything else is like mid to small cap. Asana I heard about before. Man. But this thing crashed again, down to $6. Not even sure if it's worth picking it up, though. GoTo is Chinese. We'll talk about that one later. Baozun, also Chinese, but I'm not going to talk about that. Figma. Damn, it's so bad. But maybe it'll improve. So some of these we'll have to look at during the week. I don't know. They look terrible, though. Okay, last one, computer hardware. We know this one. We got Dell, HP, all these other ones here that people talk about. Okay, we got some quantum computing. Oh, no, I'm not looking at that. Okay, NSIT. NSIT, that's the one we're going to look at. This one, okay, there's a good chance this will be in the boomer portfolio. NetApp, yes. HBQ, I don't know, maybe Everpure. Oh man, I haven't decided on this one. Everpure. Roku got. Oh, didn't Roku already report earnings? Or is it Roblox report? Yeah, Roblox report earnings, not Roku. Roblox went crappy, man. Oh my god, that went Dell. And we have Dell. Yeah, of course. Dell and Apple. Yeah. SP Micro still has a lot to figure out. That's not going to make it probably. Okay, so NetApp. Okay, that one's good chance. NetApp. I mean, Corsair Gaming, maybe. Okay, NetApp, NSIT. Okay, those two definitely. And then we'll decide if any of these other ones I want to put in there. Okay, so I think I have a list there that I'm going to narrow down pretty soon into next week. And then we're going to dump that in and then I'll finalize. This is the next 6 months portfolio that we're going to ride into January before earnings. So late January is when earnings season starts again for Q1. Okay, so that's it. That's all we got there. All right, done. Okay, so let me see if I have some picture to look at for you or video. Let's see, what video do you want to look at? I have another video, short video, lots of little short videos. Oh yeah. I'm gonna do this one. This one is from Tom Bowley. Okay, this boomer essentially is what I've copied. So the way I did my boomer portfolio, I'm mimicking him. Okay, he charges you a fee for you to look at his portfolio and then copy. I think he has a pretty good service. So if you're not interested in Samantha LeDuc's like crazy trading stuff, if you want something more buy and hold, Tom Bowley is more your speed, and he's cheaper than Samantha, I think, overall. So you just pay like $50 a month or whatever, and then he gives you his picks, and then you can copy him. All right. So I think for a lot of older folks, you're better off just doing that. You don't need anything fancy, then that's the person to copy. So I'm going to play a video from him so you could see where I've took this ideas from. All the ideas I come up with are not my original ideas. Okay. I take my ideas. I don't waste my time creating my own ideas. There's no such thing as a original idea. You just take the best. You just take the best ideas out there, and then you can apply them or create a deal. Okay, so that's him. All right, so I'm gonna go up to like about 10 minutes or so.
I'm just telling you, make sure that you lower that bar.
Okay,
it's been a very
Okay, here we are.
Everything else in the market. So it's all about perspective. When you have an area like technology that goes straight up, unfortunately, the pain is usually greater on the way down. That's just historically the way the market works. If you have a really big advance that just continues to go up and defy all odds, tendency is that you're going to see a pretty nasty sell-off when it ends. And that is what we're in the midst of right now. All right, so last week, if you look at the industry groups, I said earlier that this was a pretty nice rally. And so over the course of the last week, I went back and I've got a list. This is the listing of the best performing industry groups to the worst performing industry groups. So software, which had been an underperformer for a long time. Remember, I think it was in June, software started catching a bid, and then July absolutely turned right back around and went back down. Now we're starting to see that strength again. So software had a big week. We owe a lot of it to Microsoft. Microsoft was up substantially after they reported their quarterly results on Wednesday after the close. So that was the big reason for the turnaround there. Broadline retail, the second best group, mostly because of Amazon reporting after Thursday's close and jumping up near an all-time high, near 52-week and all-time high. So those are the two groups that were leading last week. But if you look down, I'm just looking at the sectors that each one of these industry groups belong to. So I have a numbering system where all the technology groups start off 001, all discretionary start off 002, Then you'll see the actual ETF ticker symbol. And then I've got the industry groups numbered, depending on how many industry groups are in each sector. So if you look down this, I can quickly identify whether or not these are aggressive or defensive groups leading the market. And as I go down this list through this whole page, I see general retailers, which is included in consumer staples, although I would argue that general retailers are not necessarily defensive. If I think the economy is going to weaken, I'm not parking my money in retailers. That is not where I'd want to be. So I think when retailers are doing well, that's a little bit of a testament to maybe the fact that the market is expecting the economy still to do well. So general retailers had a good week, but you go beyond that, you got discretionary technology, communication services. Then we have real estate services. So real estate services having a good week, that I would say is defensive. Then you've got another discretionary, financial, discretionary. Then we have soft drinks, defensive. And then technology, healthcare, although medical equipment, I say along with biotech, to me has a little bit more of an aggressive component. So I don't know that I would necessarily say that's defensive. And then we've got financials, communication services, and another discretionary. We could go down a few more, another financial, discretionary, another financial, industrial. I mean, again, almost everything that was outperforming last week was more in the aggressive area that would do well in a secular bull market, that would do well when the economy is expected to be strong or strengthen. And so I look at all of this and it's hard to be bearish. Normally what would happen in a rebound during what is expected to be a bear market, if you think that we've started something really bad and that we're going to have a cyclical bear market or worse, I would argue that on a rebound, you should see money rotating into defensive areas. I just don't see that. So I like the way the market is performing, even though obviously not happy about the AI stocks and the semiconductor stocks. But again, we have to remember to keep perspective in mind.
So he just went over exactly kind of how I did it with the relative stuff, right? I look for the good relative performers. And then I say, I'm going to pick the stocks based on which ones are part of the sectors that are about to look good. Right now, software is leading. Okay, that's one thing. But how he does it is that he looks through all of the little industry groups and says, like, if the market really was going to puke badly anytime soon, then any rally up, anytime the market recovers from a little correction, he shouldn't be able to see that the discretionary communication technology stocks are the ones that are outperforming. Like he should start seeing people run into like a McDonald's or a Coca-Cola type of stock, but he didn't see that. So that's one way to look at things. We do that when we look at like the ratio, right? XLY divided by XLP. That's one way you do it. If you're just lazy and you have no time to do it. So that's one way. All right. So let me continue on. He's going to go and look more into this stuff down here. Yeah. Okay. Yeah.
All right. And after the gap down in Meta and also in Google, and that helped if you go back and we look at the top performing industry groups in 8th spot. Out of over 100 industry groups, internet ranked 8th last week. So, and that was despite Meta's poor earnings report. They missed their earnings. So if you had asked me on Wednesday after that report came out, if I thought there was a chance internet would be in the top 8 for this week, I would have said the chances were pretty slim. So interesting week for internet stocks. I like the fact that they did rally back there. All right. A couple of things here. One stock that's come out with earnings recently that I really like, and this kind of speaks to the group itself, but TriNet Group, if you look, AD line very strong, we've been in a big push to the upside. We did see some profit taking on Friday, and I've got a couple of support levels marked here. This is on our strong earnings chart list, which we update every week for our members. And we provide these charts to our members. They see the annotations, so they see some of the areas that I look at for support. And I do this very quickly. I just eyeball, and whatever draws my attention on the chart is where I draw my support line. So here I could see double top that we broke out recently from. So initial support, maybe just below $63. We also have a rising 20-day moving average now. That's at 61.10. So probably around 61.10 to 62.75 is key support, at least key initial support. And then after the most recent move, you can see it have a little bit of a pullback to say that would be the next area of support. So I'm just I'm looking at maybe 58.5 to about 62.5 as being the key area of support on TNET on a pullback. Now, if I go down further, you're going to see TNET is actually in the business training and employment agencies area. And this has been one of the stronger areas in the market over the course of the last, well, you can see it over the last 5 months or so. So this is a strong industry group, and the stock, well, here's the industry group relative to the S&P. So the group really kind of bottomed back at the end of February, went sideways for a while. Now we're starting to see a lot more money rotating into this group. And since March, this stock has been moving up versus its peers. So we've got a group that's improving, and this is one of the best stocks in the group at this point. So I just wanted to point it out. These are the types of charts and stocks that you're going to see on our stronger earnings chart list. And, as far as I'm concerned, it gives our members a leg up in terms of trying to find stocks that not only are good, solid stocks, but also trying to find levels where you can get in and minimize your risk to the downside.
So that's the sales pitch. He says like, okay, I can pick out these stocks for you, blah, blah, blah. You don't need to do it. Just pay me a monthly fee and I'll do all the legwork, right? That's how the game works here. I can make a lot more money just selling you picks. I don't need to do the picks myself, all right? And the thing is that you could do this on your own. Like nothing he shows you is proprietary. Okay. There are some things he does that's a little proprietary because it takes a lot of more effort. You're going to have to open up some spreadsheets and do certain things. But for the most part, everything he does, you can do on stock charts for free, or you could pay a membership and have a little bit more extra features. But most of the time, everything he does is for free. All you got to do is like you take the symbol, you divide it by another symbol, you get a ratio relationship, you get a relative strength, and all you do is like, okay, how is this stock compared to the S&P? How is this industry compared to the S&P? How is the sector group compared to the S&P? If everything lines up positive, then you buy it. That's essentially all you have to do. And that TNET stock he was looking at, it's because people are somehow buying up stocks in the business consulting, and job training sectors of the S&P or Dow Jones in this. So yeah, looks like maybe people are getting laid off from AI, or they're worried about AI taking their jobs, so they are going into business training and other stuff, or recruiting services just to maintain their salaries. Who knows what the real reason is for something or another, but the stock is moving up. Okay, that's it. That's all you gotta do. But yeah, you could check him out at Earnings Beats. So you can go search Earnings Beats, Tom Bowley, Bowley. Okay, and you can find him. So yeah, very, very nice for people that don't really want to adjust their stocks too much. All right, now we got to get to the meat of the matter here. Let me get rid of this. How do I get rid of this thing? Come on, dude. Oh, get rid of this. Stop. Okay. Now share screen. All right. And I got this. Okay. Okay. All right. Done. Delete. Remove. Okay, let's go back to where we were on the S&P 500. So this blue line, go back to the date when I drew this one. What was it, like June something? So during this downturn, I said like, it's probably going to look like this blue. So you can say like, oh, okay. So I drew the thick blue one, all right, not the dashed one. And that was my crystal ball guess of what the S&P 500 was going to do. Pretty good. But I noticed that the volatility was shrinking. So then I changed it to this dashed line. I said, well, maybe it's going to be like this dashed line going down. So somewhere between this dashed line and this blue, the thick blue line, we were going to move this way. So very good. So my guesstimation there was not bad. So let me get rid of that. Let's hide this. Okay, so with that prediction. So now we're here. We have this bounce. Either we're going to bounce and crash like this prediction, or bounce and rise like this prediction. So I guess this one is not happening. It's this one. This thing is what's happening here. We are moving up. And right now, the NASDAQ futures is up 1.38%. That's the last I saw. So we had a nice taco right now from Donald Trump, and we're moving up here. Let's see what the S&P 500, how is that one going? Up 0.76%. Okay, on the S&P futures for the ES. So that's where we're heading towards. It looks like things are looking good. Let's look at the weekly. Look at that. So we bounced off of this 18-week moving average, and the monthly looks like nothing has happened. So if you were just in the S&P 500, what happened last month? Did you see anything? For the past several months, you haven't seen a damn thing, really. If you just checked your portfolio and your portfolio was just S&P 500 ETF, if that was the only thing you had, you probably did not care. There was nothing to make you panic. Okay? So that's the reason you have the S&P 500. Now, if you had the NASDAQ 100, it's a little bit different. Here, you got a bit worried, didn't you? Yeah, you got a bit worried because the semiconductors was dragging you down. The other AI-related stocks were dragging you down. So that's the problem. That's the problem with just having the NASDAQ 100. Maybe tomorrow I'll play this funny video. I got a funny video to play just on that. So between choosing the NASDAQ 100 and the S&P 500, it's a preference. I think you have a portfolio that only has two things. A percentage of your portfolio is S&P 500, and a percentage of your portfolio is NASDAQ 100. If you want to be more of a risk taker, you have more NASDAQ 100 exposure than S&P 500. So you just go between NASDAQ and S&P. Like some people do it like that. Like it's really basic. You don't have anything fancy. You just switch between how much you have of one versus the other. Okay? And that's your retirement portfolio. You don't have to do anything else. Just have two things. And that's it. Go from there. And you have like your choice of ETFs. Like most people, if they do that, if they buy and hold, they'll use the IVV or VOO because they have smaller fees. Okay. They have a smaller management fee than the SPY. SPY is still more popular, has more volume only because it has more options. So the reason why the SPY is still there is that people don't buy and hold the SPY. SPY is something that's used to derive the options and futures. Okay, so it has, but people that buy and hold, they just use IVV or VOO. And same thing with the QQQ. QQQ, if you want to do options, they have the QQQ options. But if you want to buy and hold, then you just use QQQM. Add an M to it. So if you're buying and holding, that's what you're looking for. So the lazy, dumb way is that you have a percentage that's VOO versus QQQM or IVV or QQQM. One or the other. I don't know. You're up to you. Your choice. So anyhow, that's what we're looking at. And let's look at the QQQ right now. Let's see where we're at. Yep. So far, that's what the monthly chart looks like. It doesn't look very good. We're entering the new month. If you look at the daily, this is how it looks. MACD is below 0. Red DI has been red for quite a while, above the 25-ish area since June 5th, since this big red candle. We haven't really recovered ever since then, but now we're bouncing. So that's what we're going to look at for this week. Will we continue on up? So let's see, Palantir, SpaceX, IP earnings this week. Those will be the first two I'm going to be looking for. SpaceX on Tuesday, Palantir on Monday. Let's look at the dispersion. What's the dispersion gives us? What the dispersion? How does this one look? We still haven't gone down to the bottoms. This was a good bottom here when we went down here. So this is the DSPX divided by core 3M. This looks at how what the difference is in the options market for individual stocks versus the whole S&P. One other way of looking at it is if you look at the VIX. VIX, was it 3? Not 3M. I forgot. Dang, I already forgot the VIX for individual stocks. Bruh. Man, I forgot already. What the heck was it called? VIX EQ, I think, right? Oh, yeah. Okay, VIX EQ divided by VIX. Let's see what this one looks like. Yeah, this thing is still high. It's still way too high. Let me add this thing to it. Yeah, no. Okay, so that's not going to cut it. That's not going to cut it. So we're still in the danger zone in that case. Prepare yourself for trouble. All right, one last thing to talk about is AXTI. AXTI, my favorite stock to look at, because I looked at it on the DeMark side. I said, like, if you were a big-time gambler, forget about SanDisk, forget about Micron. You just buy freaking AXTI before earnings. So this was Wednesday, right? This was the Wednesday drop thanks to the FOMC, Kevin Warsh. Everybody got scared, apparently, towards the close. And you got a nice deal. You got $36.68. And if you bought it there and held it through earnings and risked it all and gambled it, you hit a top of 67. Right at the moving average here. The declining 40-day moving average. Right there. Right there. So where are we now? Where should we go? So it's not this one. It's not this one. Looks like we got above this. Are we going to do this? Are we going to pull back and go on here? Or are we just going to dance at a higher level and move up? Is that where we are? So I think if you want to look for something to trade, this is still viable, because this thing can go all the way back up to 96 or higher, maybe even 133 if you're lucky, and you can get out there. So AXTI reported earnings, and they liked it for now anyway. It's up 2.8% overnight. It looks like I see it creeping in here. I see that. I see this thing creeping in. I see the 2.85. Yeah. So it is up. Overnight market, it is up. So that's one you're going to have to look at. We might go over like a video talking about like its earnings later on this week. All right. The other thing to look at is the 3-month yield versus the minus 2-year spread. I told you guys that if this thing dropped below around 0.5, so negative 0.5, if it dropped below there, watch out. Something bad is going to happen in the coming months. Well, after this week, we are in the border zone here. We are about to break down. And if I see that, then we are probably going to have a pretty bad October. Okay, pretty bad late September, October. And that's probably a good sign for you guys who have been waiting patiently to buy the dip. So that's what we're going to be looking at. Anything else? Last thing I want to look at is BE, Bloom Energy, one of the stocks that Ashen Brenner guy, he had a lot of stock in this one. So it had earnings last week. And if you see the weekly, there was a lot of volume coming in for here. So where do you think this is going to go? If this is true buying, then this thing this week, it should be very easy for it to fly back up to $300. So from 205 to 300 shouldn't be hard for it to do. If I look at the daily, you see that nice volume characteristic right there. Okay, and we are changing from a down move to an up move. So all we have to do is clear this level at 240 and 328. Once it clears there, we could go a lot higher. So he got wiped out, but you can try to catch this wave back up. So this stock might be still available for you to play with. So if you didn't get the exact bottom, no worries. Maybe this one is the one to try. Now, if I look at the 78-minute chart, I think this was the only thing that looked like a bottom ahead of Thursday's pump. So remember, this thing already had earnings on Tuesday, and Wednesday we had a reaction. So we went up and went all the way back down, and then Kevin Warsh started speaking. So we recovered a little bit and we went back down. But if you zoom in, it made a higher low than here. So if you just base it off of that, you probably would have been bullish on BE. First of all, it already reported earnings. Second, the NASDAQ and S&P 500 went to a lower low, but Bloom Energy did not go to a lower low at the end of that day. And then finally, we had the Bank of Japan save us, and we pumped right back up 27%. So this whole area now is going to be interesting. This point from 186 to 234, this was Friday's high in the morning. Watch this, because now we're seeing the momentum pick up. We're going to get up here, see if this thing has a bottom and return. So if this thing retests at 190, maybe that's where you want to get in. Okay, for Bloom Energy. BE is the ticker. All right, that's all I got to say for that and the AXTI. Now, let me see how much time I got left. I'm going to play a little video for you. I think I'll play a little video. Yeah, I will play a little video for you. Let's see, which video should I play first? Oh, yeah, we have to wrap up the liquidity video. Yes, that one I need to wrap up for. Yeah. Okay, so let's play that one. Okay.
Welcome, Michael. Thank you with us today.
About 8 to 10 minutes of this.
Market is what kind of are you in a bottom period, in a strong up? Now we think that doesn't mean we're going to get ups tomorrow, but it means that you should be looking for those late cycle signs. And we identify what we call speculation. In speculation, what happens is you can get decent returns with high volatility. So the quality of those returns is actually reduced significantly. And that's the phase that we think we're in. The other characteristics would be that you would typically see at this late stage commodity markets doing very well. Commodity markets investing semiconductor companies or robotic companies, they're clearly going moonbound almost. But then if you look at the rest of the market, outside of these stocks, that isn't really the story of a strong bull market. I mean, maybe prices are going up, but they're pretty lackluster, and there's a lot of stocks which are making lows. So we've got to remember this. Put this in context. The other markets, because the bond market is so critical to this, and if the bond markets are often more important because they're part of the funding mechanism. Now, if you look at the bond markets, what you're getting is a movement in the term structure, which is called a bearish flattening of the curve, which means that the long end of the curve, but they're going up at a slower pace than the front end. So the curve is basically beginning to flatten and invert. And that's a very late cycle signal normally, and it's not a good omen either.
So looking forward, when the late cycle process is in a peaking process, what happens next usually? What would you be looking for as an investor?
Well, the next phase is basically to say what then begins to happen is that bonds start to come debt, and then you move mid-duration and then finally longer duration. So this should be a phase as liquidity falls lower, that the bond market should be getting more of a bid. Now it's difficult to see that at the moment, clearly, because there's a lot of negativity about bonds, but in a way that's telling you that we're moving towards the end of that particular phase. When everyone sort of believes that the story is negative, it normally flips to being positive. And that's, I think, one of the things that it's always good to be a contrarian.
It was interesting to see that the Bank of America Fund Manager Survey most underweight in bonds, I think, in a long time of the survey. You know?
But you brought up that cyclical perspective. You also brought up. So I think you identified a major cycle in this global liquidity. I mean, we talked a little bit about it's peaking now. So that was the current discussion. So how did you came up with that cyclic identification? So I mean, you did it in the year of 2000. So it's a long time ago.
Yeah.
So.
Well, I think the first thing to say is that we'd identified cycles in the data before. Okay, so it's clear that you can see a cyclical pattern, and that cyclical pattern is increasingly a sort of global phenomenon. So more and more countries tend to gravitate towards a central cycle, and that central cycle may well be a cycle that is initiated by the Federal Reserve. That's quite plausible. In terms of actually measuring it, we saw there was clear evidence of cycles. We were beginning to see from the data, because of the length of data we had, that there was a regular pattern. So we tried to fit that using Fourier analysis, and we did that quite thoroughly in about year 2000. Now, what we've done since then is, after establishing what we then found was a 65-month cycle, is then to extrapolate that forwards in time, which we've done over the last 25 years, and then to look at the actual outcomes relative to that predicted template. And it seems to line up reasonably well.
So it worked out. So you made your forecast in the year of 2000, and then kept it more like static. And now
exactly
and you're monitoring now the global liquidity, which seems to run on rails.
Is there any specific asset class or indicator that is a bit like the canary in the coal mine that signals an early turn?
Not necessarily. I mean, there are various things that I think you can look at. I mean, I think if you want to look at the indicator which has the most robust relationship with the liquidity cycle, even though it lags, but that doesn't mean to say you can't use it, is the slope of the yield curve, the slope of the term structure. And that's a very important variable. So that tends to inflect around about 9 months after the liquidity cycle. So it tends to be a confirming indicator, but you can also, by looking at the cycle in the yield curve, give a very good heads up of where you are likely to be in terms of the liquidity cycle.
We have a new head of the Federal Reserve, Kevin Warsh. He mentioned the idea of lowering the balance sheet in the United States and backpedaled quite a bit. What's your take? What do you want to see from him in this new role he's taking?
Well, I think that's a leading question and a difficult question to answer. But I would say that, I mean, the first thing to say is that is the Federal Reserve the real mover and shaker still in the markets? I mean, that's really the question. Or what particular lever is it that's important for the Federal Reserve? Now, everyone focuses, because we're clearly told to focus on this by the media in particular and by the Fed, is the Fed funds rate. Now, there's a whole pantomime around setting Fed funds the FOMC space. It's really a pantomime. It's an orchestrated pantomime. But does it really matter that interest rates go up or down? Federal Reserve interest rates? Not really, because the amount of transactions in the Fed funds market is de minimis. I mean, it's basically a sort of a headline rate that they use. What's really going on is what's going on beneath the surface. And what you've got to look at is what they're doing within the markets, how they're manipulating the level of liquidity in money markets. In other words, look at things like bank reserves, how the Federal Reserve is managing that. For example, in the last 5 to 6 months, the Federal Reserve has injected $600 billion into US money markets. I mean, that's a sizable amount of cash, almost $1 trillion we're talking about, has gone into the markets. Any wonder why Wall Street is bubbling, okay? Now, what they've done is to do that because the repo markets were getting thirsty, or they're running out of liquidity. And you were starting to see spikes in the rate I mentioned, the SOFR rate. The other thing you've got to look at is, let's broaden this out from the Federal Reserve, let's think about what the Treasury is doing, because the Treasury and the Fed are really acting together here as the monetary authority in controlling liquidity in the markets. The Treasury is, first of all, skewing issuance in the US towards the front end of the maturity structure of government debt. So they're issuing lots of T-bills, not issuing longer dated 30-year debt, for example, or very restricted amounts of that. And the point is that by doing that, they're not only rationing the long-term funds, like the pension funds and the insurance funds, that want that longer dated debt, okay? So they're, if you like, artificially suppressing yields at the long end. But the other thing is they're pumping a lot of money into the front end of the curve. Now, what does that mean? The question to ask is, who buys that debt? And who buys that debt are the banks, okay? So if banks buy government debt and buy treasury bills with alacrity, what does that mean? That's called monetization. That's called printing money. Because if a bank, an intermediary, buys government debt, they're monetizing the debt. So that's clearly printing money, and something that the old monetarist, late monetarist Milton Friedman will be turning in his grave at looking at what the Federal Reserve is doing.
But that it doesn't look like it's going to change.
No, it's going to get worse because they've got a big deficit to fund.
That's the debt wall you're also referring to.
Well, there's also, in actual fact, this is part of the problem, is that what financial markets act as today is refinancing mechanisms for debt. They're no longer new capital raising mechanisms, which is what the textbooks told us they were, for new capex, right? They're predominantly debt refinancing mechanisms. And so we've got this huge pile of debt sitting on our shoulders, weighing down the world economy, but it needs to be refinanced, needs to be rolled over. This is debt with an average maturity of 5 to 6 years. Okay, so every 5 to 6 years, you've got to keep funding. Obviously, you've got to fund it every year, but if you issue a debt today, it's going to mature in 5 years. You've got to roll that again, and that rolling process is an ongoing burden for the markets. So, if you look at the U.S. Treasury, they're rolling. I think the current figure is $600 billion a week. Okay, these are big numbers, right? So if you make a little slip up, things can go badly wrong. And so they need to juice the markets with more liquidity to make sure they get this away. So this is the process.
It feels like Wall Street is paying a lot more attention to the long bond yield lately, especially once above 4.5%. Trump always seemed to backpedal quite a bit. The level of nervousness increases. What's your take, if you have an opinion on that, what is your take on the long bond yield for this year? And maybe in regards to your statement that 2026 specifically is an important year, also in regards to debt that needs to be refinanced?
Well, I think the first thing to say is that the data and my impressions are that the US economy is booming. There's no question about that. Okay, it may be a K-shaped economy, as people say, but the fact is, on average, the economy is booming. Inflation is becoming a problem. Okay, there's no question about that. And whichever way you split that, you can say that nominal GDP growth, the sum of the two, real activity and inflation, are humming along at a fast pace. That figure may be 7%, it may be 8%, but it's that sort of magnitude. Is that consistent with a long bond of under 5% or circa 5%? It's not. Okay, there's got to be upward pressure on the bond market. So what are the authorities doing? They're trying to cap bond yields by swinging issuance towards the short end, starving the long end of issuance, okay? So there's excess demand for long-dated bonds, keeping yields down. And they're managing volatility to encourage more buying. I mean, this is getting into the weeds of bond market talk, but basically they're doing a basis trade where they're buying cash bonds and they're shorting futures, but that depends on low volatility. So what's happening alongside is the Treasury is coming into the market and suppressing volatility. So it's not yield curve control, it's yield volatility control that's going on. And they're doing that through Treasury buybacks. So every time there's a move up in the what's called the MOVE index, which is the index of bond volatility, like the VIX, but for bonds, every time that index moves higher, Treasury buybacks increase and volatility comes down again. So there's direct intervention. So my view is that far more important than Fed funds is the MOVE index.
Absolutely, and you saw that during the beginning of the Iran war, right? I mean, the MOVE index went parabolic, but also turned down. And
they hammered it down.
And they turned down and helped Wall Street rally once
Correct.
again. Correct.
Talking about markets also a little bit, you monitor the gold to oil ratio as another measurement of markets. So can you tell us how is this related to global liquidity and what do you see in the gold to oil ratio?
Well, the gold oil ratio is something I've looked at for a long time. It's something that economists tend to dismiss, but I think as a market practitioner, it's a very valuable tool. And what it basically shows is the ratio between an ounce of gold and a barrel of oil. Over the very long term, and we're talking here 50, 60 years, that has averaged 20 times. So in other words, if you have, for example, in 2022, an average gold price of $2,000 an ounce and a barrel of oil $100 a barrel, that ratio is 20, okay? So that's the long run average. Now, where are we now in gold? Well, we can say we're somewhere between $4,000 and $5,000 an ounce, okay? Divide that by 20 and you're well over $200 a barrel for oil, okay? Guaranteed reaction you'll get if you suggest to a crowd of investors that is a mad prediction. Nobody buys that at all. It is so ridiculous, people will dismiss it. But that's what history tells you. It's not necessarily a forecast, but it's a question of understanding a triangulation because you've got three moving parts. Oil and oil gold prices being sustained at a high level because ultimately there's monetization of debt. Okay, this is what governments have to do. They have to barometer. And that's happening in China as well as it's happening in the US. The gold oil ratio has been fixed at 20. Therefore, you should be getting this high or ultimate moving gold. Doesn't mean to say that if the Iran tensions subside, gold won't fall back short term. It will do. We're talking about the longer term. Now then, if you start to think about these cycles and why this is important in a cyclical context, it so happens that if you track in this same 65-month cycle, exactly the same as the global liquidity cycle. And if you look at the beginning of the upswing of the gold oil ratio, it moves the front end of the cycle more. The back end of the cycle, what happens is the gold price doesn't come down, it's much more the oil price goes up, and that's what forces the ratio down. Now, why is that happening at the end of the liquidity cycle? Because the end of the liquidity cycle occurs because money leaves financial markets and moves into the real economy. And we are monitoring through this cycle money flow through financial markets.
All right. That perfectly explains now why gold predicts oil. Because gold goes up, then oil goes up. Gold goes down, then oil goes down. Because it's just repeating itself from this liquidity cycle. That's where the root cause of it is. So if you were asking why, McClellan can't answer that question for you. He doesn't care about that. All he cares about, like, he sees a relationship between oil and gold. But this dude thinks he has an explanation for that. It's because these pairs, these two things are related at the beginning of the liquidity cycle and at the end of a liquidity cycle. So now you have your answer. That's why it's spaced out the way it is. Okay, these are just reactions to the same phenomenon, just one after the other, because one is at the beginning and the other is at the end. So oil going up means that we're at the end of this liquidity cycle. All right. Okay, there you go. You got your answer now. I don't know. There might be more stuff in this presentation. I'm not sure, but we're not going to cover it right now. I think that's all I wanted to hear. That was very good. All right, we'll see you around. Let's see what happens this week. Which stocks to pay attention to, what to gamble on. But if you didn't get into the trade last week, then we'll have to figure out something else. We have to see how long this thing lasts because it could fizzle out. This thing could crash and burn fairly soon this month. It might not make it past options expiration. But if we somehow do make it past options expiration, then I gave you some dates to look at. Jewish New Year's, Rosh Hashanah at September 11th, and then Yom Kippur around the 21st of September. Around that area should be where the top is. If we